Hello, Troy White with Hoodoo Financial, and today I wanted to discuss a topic, and that topic is basically my belief, my observation in terms of financial planning, and that is to achieve success, you must invest with a plan. And that's saying a lot. First off, that's assuming you need to invest to achieve success. Well, it's sort of like a chicken and the egg thing. Which comes first, the success or the investing? And um, what I can tell you is any rich person, millionaire or whatever, if you were to have fallen into money, the only way that you're going to maintain it is to invest it. But what I also know is that anyone who is going to pursue wealth in any sort of way is going to have to invest along the way. You can also refer to it as save and invest. You can even back up a little further. You're going to have to budget, save, and invest along the way to achieve your success. So in order to budget, save, and invest, all of those require you to plan. All of those fundamentally are about planning ahead. And there is no journey that you will ever embark upon that you're going to reach your destination if you didn't plan a road map or have some sort of direction as to where you are going. You know, you can't just say, I'm going to drive to Mexico. You don't even know where the hell Mexico is. You don't know what it looks like. You don't know what you're going to do when you get there. You don't know how you're going to get there. You don't know if you might run out of, you didn't plan for the gas to get there. You have to plan every aspect of that trip. Same with your finances, same with your financial goals, same with your goals, same with your dreams. You have to turn your dreams into goals and then assign dollar values to your goals and then come up with a financial plan to achieve your goals. And then you come up, devise an investment plan within your financial plan to achieve your goals that were formerly dreams. It's all a circular flow. You constantly monitor the plan, but there's no way you're going to achieve anything if you didn't plan to achieve something. And then if somehow you accidentally stumbled upon something that you will now identify as success, then you're going to lose it if you don't plan to invest to maintain it. It's a circular flow. It's a loop-de-loop going on. You must invest. So you must start planning. So assuming you agree with me, so then where do we start? Where we start is on the path to achieve your goal, you have to line up what your goals are. So actually identify what you about. What is it? What you out here for? What are you hustling and bustling for? Is it just to pay some bills? You've been having bills ever since you were a teenager. Is that all it's about? Just keep paying bills? Then we don't even need to be talking. You can turn me off right now. I'm not really someone who can just help you pay bills. But if you want to start to budget and plan for success, then that's something that I can help you on. That's something that these words can help you with. So the plan begins with an itemized budget. And then you have to track that budget. So itemize what you think you spend your money on and then track it so that we can line up what you actually spend your money on. And that depends on how broke you are or how poor of a financial steward you are. You know, I'm using the bad terms, I don't mean to talk bad about you. But what I'm really saying is it depends on how fast you spend your money and how easily it is for you to be departed from your dollars. And we have to get an idea of that. And so the best way for me to understand it is for you to understand it. And so for you to understand it, I want you to write down what you know you spend your money on. your non-discretionary monthly payments, things you have no discretion of paying. You have to pay all your bills, the stuff that got to get paid. Write all of that down. And then throughout the month, I want you to also track every time you spend some money. So you buy a Hershey bar, write it down. Let's get to it. Let's itemize everything you actually are doing. And then we're going to work backwards and try to see what we can cut out. And whatever we can cut back on, we're going to get to increase the amount of your investments. So right off the top, we're going to do a ratio analysis off the top of the bat. You need to be paying yourself first. You're the one. You're the only person that matters. You're the only person that matters to me. You're my client. If you're my client, which if you're listening to my words, then right now, at this moment, you're my client. So you're the only person that matters to me. So you're the only person should be getting paid from your salary. I don't care about no FICA or none of that. No tax. You should be getting 10% first. So your investment account needs to be getting 10%. If you made $1,000, it needs to be $100 going to your investment account. I don't care about your 401k and all of that. If you want to include that in your calculation, you can. But if you're doing 3% in your 401k, because they're matching you by 3%, great. We need to get that extra 3 from them. If they're matching you for 6, then put 6% in there. Then we need to be doing another 4% somewhere else. So come over to us and do it. Open an account with us and do that other 4%. But you need to be doing a total of 10% minimum. Now understand that we're trying to get you up to be doing 50% of all your earnings from wherever you're making it should be going towards your investments. That's where I want to get you to. Half your money, half the income that you make every month is in excess of your expenses, of your monthly required expenses. So you got extra bread that we're going to invest every month. We're trying to get that up to 50% of your earnings. That's what we're trying to get. So right now we might be negative. We're not investing nothing, right? And we're spending everything plus more. So we got to get out of that hole. So that starts with you itemizing what you're spending, what you're doing. And then what we're going to do is shift that waste over to your investments, because we need to turn this around and you get paid first. Not your phone, not your car, not your power, not your water. You need to get paid first, 10%. 10% of your earnings need to go to you. And we need to start working on everything else from backwards from there. So that is how we're going to start to get you to a proper financial situation, because we have to plan. What I said in the beginning, to achieve success, you must invest with a plan. So we need something to invest with. So even if it's $25, we're going to start with $25 a month. We're going to start investing that. And then, hey, do you have any old 401ks anywhere? Any jobs that you had a 401k contribution going in and you don't work there no more? You probably still receive a statement. Even if you don't, we need to track that down. We need to get those funds, assets under your control and start investing your money in a proper way, in a proper place, in a proper manner, in a proper assets, at the proper timing, for the proper reasons. Get your goals accomplished. I'm starting to get upset, excuse me.